We've talked about getting ready for an audit, and this talk is about audit-ready bookkeeping. There's no software that I'm aware of commercially available in the market for people to do audit-ready bookkeeping. So I'm going to try to give you the highlights of what audit-ready bookkeeping is and what it's comprised of. When we do audit-ready bookkeeping, what we do is we take each source document and gets assigned an item number. Then when we do the data entry for that item, the item number is carried forward into our accounting, and we identify how that was paid. We identify the business reason why the money was spent, and identify what type of source documentation we have. So we always track money throughout the whole thing is where the money came from. Money went into the bank, paid off a line of credit, paying off debts is not an expense. So we have to make sure that we track that properly. We have to make sure that, okay, you've got money in your account, you put it personally, it came back to the corporation. We have to identify that was a loan for all intents and purposes. Whether you were incorporated or sole proprietorship, it doesn't matter. If you've taken money, put it into your business, that's not income. It has to be identified. It's a lot simpler in audits and bookkeeping if you're not incorporated. And I'll get in another video presentation, I'll talk about incorporation, whether you should do it or not. So it's really simple with sole proprietorship. You have gross income, and that's comprised of taxable income and non-taxable income. You need to identify the non-taxable. You have expenses. They're either personal or business. You don't need to worry too much about personal expenses because you didn't deduct them or shouldn't. And they don't have to enter into the equation. I like recording personal expenses because it helps to keep you aware of how you spend your money. And so from that point of view of being financially prudent, it's a good idea to track your personal expenses. And it also helps to balance things. If your income minus all expenses is the money in the bank, there's no such thing as a net worth assessment that's going to happen on that, not if you reported your taxes properly. So you want to be able to make sure that the expenses are related to the stated business that you're in, and that you're not trying to experience business expenses just to reduce your taxes, because you get in trouble with that. There's a general anti-avoidance regulations, affectionately referred to as GAR. If you've done something just to reduce your taxes and it's not genuinely business, you lose those deductions and you pay penalties on it. So largely speaking, audit-ready bookkeeping is a record of how much money you made doing what when, how much money was deposited that wasn't income, what expenses were claimed that were real, what expenses you had that were really personal and separated, and what was your net income, making sure that you remember all your income offshore. That's serious if you don't report that. Your interest that on accounts. If you sell something that's worth money, you need to claim that as capital gains. All those things need to be tracked. If you track everything that has to do with money, then you're audit ready. Most people aren't. So if it's small amount of money that you're making, small amount of expenses and income, probably don't need our services. But if you're dealing with a reasonable amount of money and you could find yourself with a tax debt that you can't afford, you better get help and keep it from becoming an audit combat. So keep your records audit ready, and if you want to know more about that, there's a good description on our website about audit ready accounting. Thank you.